Get the latest on what's going on this earnings season, meets, beats, and more in Zacks Earnings Scorecard.
Hey everyone, I'm Eric Dutram for Zacks.com. This week we're taking a look at earnings, in particular big banks. Some of the biggest financial institutions in the country gave their quarterly reports, and they really moved markets over the course of the week. First up, let's take a look at JP Morgan. Now, JP Morgan, they beat in their most recent report, reporting $1.35 a share compared to $1.26 for an estimate. Now, this continues the nice streak that JP Morgan has seen on the earnings front. But there was definitely still some questions over revenues. Revenues definitely declined, so did earnings. But investors really focused in on, beating subdued expectations. This is really the story for JP Morgan, as investors are saying to themselves, hey, things might not be quite as bad as we initially thought for a lot of these companies. If we look to some of the recent estimates for JP Morgan, we can see that some of the most recent ones have come back a bit. And although we've seen several that have gone lower over the past week, we have finally started to see some that have gone higher. This could suggest that a turnaround might be starting to build in companies like JP Morgan, and investors might think that the worst is over for a lot of these companies going forward. We saw somewhat of this trend take place in Bank of America as well. If we look to their recent chart, we can see some of the recent numbers for them, and also in particular the price and consensus. As we can see for Bank of America, some of the recent price and consensuses have been far lower over the past couple of years. However, trading activity has been very positive lately. This might be somewhat of an issue for investors. After all, Bank of America did miss their most recent results by a penny. But once again, this is a time where investors saw very subdued expectations, and Bank of America was able to climb out over these and show investors, hey, maybe things might not be as bad going forward. And that has really overridden some of the issues we saw on the earnings front. So Bank of America sort of followed in the footsteps of JP Morgan, even though they saw an earnings miss and JP Morgan saw a beat. We see a different situation if we look at some of the smaller banks in the space, such as Wells Fargo or PNC. These companies are more focused on interest rates, and they don't have as much to do with the trading. If we take a look at some of the recent charts here, we can see that for Wells Fargo, they have a pretty good track record on earnings history, only one miss in the last 5 years. But we can see that the consensus has been falling sharply over the past year for the current forecast, and that's largely thanks to the Fed and their lack of interest rates. A lot of investors had hoped that companies like PNC and Wells Fargo would see higher profits thanks to higher interest rates, but this definitely hasn't happened so far in 2016. We can see a similar trend if we look at the PNC report, and if we look at their pricing consensus chart, we can see that this has also fallen over the last couple months. And same thing with the previous year's outlook as well. Now, if you compare these two to Bank of America and JP Morgan, we can see that some of the results haven't been as good on paper, or at least the outlook hasn't been as good as some of the more trading-focused companies going forward. And that's really why we've seen this different opinions for these types of stocks. And last up, we had Citigroup. This company sort of falls in that Bank of America and JP Morgan path. They also beat earnings this year. This quarter, but once again, this was a case where estimates had fallen sharply over the last couple months. We've seen from 90 days ago up until today, the estimate had fallen from $1.50 a share to $1.04 a share, and so it was very easy for Citigroup to sort of climb out over this number and beat estimates, and that's why we're seeing some positive trading here. The real key, though, will be some of the companies that are reporting next week. So make sure to tune in the coming days for some of the reports that we're going to have on earnings for previews and results. There'll be plenty of that on the site, so make sure to sign up for our YouTube channel and check out the earnings section on Zacks.com, and I will see you then.